Let's put our attention to the globe and all of the conflict that is taking place in the Middle East and how markets are likely to react. We've got Arvind Sanger joining in from Geosphere Capital Management. We have Rajeev Agarwal with us for Doordarshi India Fund. Thank you so much for taking time out, gentlemen. Arvind, clearly the tensions in the Middle East seem to have dampened investors' enthusiasm, but only to a certain extent. Do you think that investors are prepped now for more uncertainty?
Well, it's hard to say. Look, when we had a similar incident a few months ago, when Iran sent cruise missiles and some drones, the Israeli reaction was very measured, and it was a small pinprick, and that was the end of the tit for tat. This time, Israel has clearly been seeing an opportunity to take some meaningful action. They're crossing a lot of red lines. They've done that in Lebanon. The question now is, will they go as far as going after Iran's nuclear facilities? Will they go after some of their crude oil exports facilities? Will they go after their refineries? But it's definitely going to be scaled up, because the reality is that despite Israel pretending nothing much happened, there was some serious damage done with some of these. These were ballistic missiles. These were much faster, much harder to intercept. And some of them got through, and there was some damage to one of their air bases. So there is a higher risk of greater retaliation. Whether that'll cause a significant blowback from Iran, we don't know. So I think the risks are higher. But as you were discussing earlier, I think the market is still hopeful that it'll not green out of control and things will stay relatively unimpacted in terms of any major damage to crude. That would be the biggest thing in the Middle East, right? If there was a major impact to crude exports, that would be shocking, and that would be what would cause the biggest risk to global markets.
Rajiv, every time when there's problem in Middle East, like Arvind said, that you think about crude. Now we did see a spike in crude, but it was a measured spike. The importance of crude as a source of energy seems to be coming down because of the energy transition. So do you think it is highly unlikely that while there may be news and there may be tensions in Middle East and things may really escalate, but it is unlikely to have a collateral damage to financial markets?
Yeah, it's a very interesting question, Nikunj, because crude, obviously, we always associate with the Middle East conflict. I think given how well balanced the market is on crude, if any big supplier of crude is taken out of the market, even incrementally, I do think that could have a pretty quick effect on the markets. And right now, the markets are assuming that the crude will continue to be in abundant supply, and therefore the markets have reacted the way they have. I think that is definitely a risk that I am seeing, where if the crude gets impacted, then the financial markets may have a much bigger impact than they have had so far. And I think the markets are telling us at least that right now they don't expect that the crude will be having much of an impact from a supply perspective as of now.
So Arvind, for our audience here who's watching the show, should they worry more about Middle East? Should they focus on money moving to China, or should they ignore both and just stay invested because the Indian bull market will continue?
Well, look, the China story is more something that global investors, and I think I've said this before, that if and when, and now we have the when, China does anything to stabilize or improve its market, then you are going to see relatively large fund flows to what has probably been a hugely oversold market till about 2 weeks ago. So yes, there will be money flowing into China, and that's a short-term phenomenon. But for investors in India who are playing the long-term India story, it's more important to watch. There were some slightly disappointing data in terms of tax collections. It'll be important to watch this earnings season to see whether the economic fundamentals are remaining robust. Is the growth continuing? I mean, those are the more important things. The flavor of the month, whether China is or not, is less relevant for Indian investors. So I think watching the Indian earnings are most important. But look, you can't get away from crude, and I would be I would very strongly point out that energy transition hasn't made any meaningful difference to crude. The amount of crude used for transportation continues to climb, and it's still a small fraction of cars in the world that are sold that are electric cars. So the impact so far, crude is still very important. Middle East is less important because of growth in production in US and Brazil and elsewhere, but it's still enough that it can cause significant upheavals. Hopefully, there'll be no reason to worry about it, but it's a thing to keep an eye on. I think that's more important than China from Indian investors, and Indian earnings obviously are the most important.
Okay. So, Rajeev, what changes in the overall scheme of things, how you manage money? Suddenly there are three more variables, three more ingredients, if I may use in the melting pot. Fed is bringing rates down. China is emerging as more like a trade or investment that we'll only figure out in time. And third is what's happening in Middle East. Now, these are three very large, factors which could influence portfolios in the near term. How would you change your India positioning because of these three factors I mentioned?
Right. I think one of the things is we do expect that given the three things that you talked about, Nikunj, that the volatility may go up. It has been a very sanguine market. We have seen it. It keeps brushing off any surprises that are being shown up. But the risk that we have, which I believe has not been very well priced, is the risk of the volatility and things getting out of control very quickly, especially in a hot zone like the Middle East. And as we have said, Middle East is an area which will have a cascading effect in many other places. So that definitely is something that the way we are positioning is to plan for having higher cash. So we are having a higher cash allocation today and really looking for better opportunities as we are deploying that. I think on the China angle, which you brought up, which I think even though it might only be a short-term angle, I do think that we have seen a significant outflow from India, FPIs who are focused on India, and we have seen a significant inflow into China. And so I think the one big impact of the changes that are happening in China could be that the money moves quickly, and that may actually again create more volatile markets, and that may give us opportunities to take advantage of. So I think the key thing that we are focusing on is how the markets are reacting, and if the markets are very sanguine, we are happy to also take some money off the table at this stage to be better prepared if and when the volatility shows up in the Indian markets.
All right, gentlemen, thank you so much for joining in and giving us a sense as to how the global market could potentially react and how we're seeing escalating tensions building up in the Middle East.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.